Our next guest is Peter Walsh. Peter is founder of Match Capital. Evening, Peter. Thank you for coming.
Thank you.
So, what is Match Capital and how does it work?
Match Capital is basically match.com for venture capital, or that's how we euphemistically describe ourselves. We basically have an online site which allows entrepreneurs to discover potential investors for their business. It works on an algorithm we've built which looks at the metrics of the companies, looks at the investment criteria of the investors, and tries to pick out the most relevant investor for each entrepreneur that comes to our site.
Okay. And at what stage in the funding process should a startup considering registering with Match Capital?
Well, to be honest, they need to have a registered company and they need to have a team in place with at least a minimum viable product. So if the guys haven't actually left their previous jobs to commit to the business, then they're going to be far too early for the investors that we're trying to showcase for the entrepreneurs. They need to have something that's nearly there, or generating revenues, or at least on the cusp of generating some money.
Okay. And how many deals have you funded so far?
Well, we do two types of things. So if a company wants to discover investors by itself, we have an online subscription model which is $29.99 a month, and it's a minimum, it's a rolling one month contract, so they're not tied in for more than a month. But we also do offline deals where we'll actually roll up our sleeves, help the company to get introductions to the right investors. The biggest deal we've done so far is a €2.5 million investment from Nota Capital into a company called ChannelSight, which is an Irish technology company, which is where I'm from, but no coincidence. Okay. So anything up to £3 million pounds or euros is roughly where we're the kind of deals that we're targeting.
Okay, and how do you compare to things, platforms like Proceed, Just Investing, those sort of platforms, and Gust?
Sure. Well, I think we're complementary to crowdfunding sites. So we have good relationships with a lot of the crowdfunding sites and with the angel networks, where if companies come to us looking for information, if we think that they're the relevant platform to go and raise the money, we'll refer those deals on. Equally, the angel networks and the crowdfunding sites will come to us when the companies that have maybe done their first raise on that platform need to raise a more significant amount. They'll come to us. So we have quite a symbiotic relationship with the different platforms. Okay,
and in terms of where the investors come from and where the companies come from, it's UK centric or global?
Not necessarily. We have companies that register from all over the world. Being honest, the best results are obviously still for the UK and Irish companies in particular, because the investors we've profiled into the site are predominantly looking to invest into UK and Irish companies. But there's no reason why we can't have companies from any country register on our site. Equally with the investors, we try to aggregate any investor, particularly institutional professional money, from wherever it is, if it's investing into this part of the world.
And do investors pay to join the site?
Not at the moment. I feel we act as almost like a free marketing service for them at the moment. The way we started out was to try and make the investor audience more visible for the entrepreneurs. That's where we felt the problem lay. The investors have a range of different platforms they could use to source deals. We wanted to try and make the investor universe more visible to the entrepreneurs, because that's where we felt there was a real need, and that was the need that we tried to address.
Okay. So there's many venture capital houses out there, obviously, all investing in different technologies. Is there a sort of an edge that you think you have against those guys?
Well, we're really trying to be an intermediary and a conduit to investors and to investment. So we're not really trying to compete with anybody. We're trying to bring people together. Our sweet spot in offline deals has been in the retail technology space, so technologies that enable retailers to sell more stuff. Yep. But we also run monthly events, pitching events, where we'll pick a particular sector and we will canvass for companies within our database that fit that criteria to come and present, and we'll invite investors from all the different funding platforms, whether they're crowdfunders or angel networks or VCs or family offices, to come and listen and hopefully to try and make that make deals happen in a much more logical and data-driven way.
Great. And so that the due diligence process from Match Capital's point of view, any company can actually register, or do you have a process?
Well, any company can register.
Right.
What we try and do is to look at, we use things like due dil and Companies House to get a better understanding of whether the company is actually real. It's more difficult if they're not in the British Isles to establish that. But by and large, the companies that come to our site are, fully fledged businesses. They have a problem. They can't find money. It's difficult to borrow from the banks. You need to be, almost profitable to borrow from the banks these days. If you're an early stage startup and you're burning cash, you can't borrow money. So you need to find equity. That's what we try and provide, is visibility on all those equity providers.
Okay. And the current turmoils in the market, are you finding those a boost or a...
I think there's two answers to that. One is that either we all run scared because the public markets are in disarray, and so that means that investors generally just have a risk-off approach. Or we can look at the innovators, the young startups that are, the new economy. And so we look at the old economy being battered, but the new economy emerging to take its place. I saw today there was a company called student.com raised $60 million. Yeah. To advance its business, and that's got to be a great boost to the early start business, that it's growing and it's positive, in a positive state of mind.
On that note, what do you think about valuations for earlier stage companies in the UK versus the US, for example?
I think the UK and Europe is much more realistic. There's a phrase I once heard, that in the US, if you have a good idea, they give you hard cash. In the UK, if you have a good idea, they give you a hard stare. And that seems to be the case. The investors that I know are, they're very forensic about where they're investing their money. So they're not just spraying and praying. They are, they're very forensic about what they're looking for. So it's tough to raise money. Mm-hmm. So as a result, you need, as a startup, to have a realistic approach to your valuation. If you're shooting for the stars at the very beginning, you are going to come unstuck. And
so are you investing alongside other investment entities, VCs or VCTs or funds, etc.?
We're a startup ourselves, okay, so we have to take a pragmatic approach. But we have, in the deals that we've done where we've taken a success fee for helping a company raise a decent amount of money, we have taken part cash, part shares in some of the companies. So that we like that model because we'd like to build up an asset base of our own over time. So we're not adverse to doing that at all, and so we'll continue to follow that policy. And
do you see there's a company, I'm sure you're familiar with, Asset Match, a secondary market. Yep. Is that something that you see, Match Capital? It would seem to be a kind of a useful marriage at some point in the future.
Very possibly. Yeah. I know the guys from Asset Match. Yeah. I've always liked what they're trying to do. I think there's a lot of initiatives in the private markets trying to make it more digitally enhanced, and there are a lot of the crowdfunding sites obviously are the successful component of that, where we've seen peer-to-peer investors putting in money. I do think that secondary markets will emerge, like Asset Match and others, and we definitely we look at them as potential partners in the future, no question.
Okay, and of the crowdfunding sites, are you seeing any trends coming through that you think are particularly notable? Well,
I think it's admirable what they're all trying to do. I think the problem is that there seems to be a new crowdfunding site opening every week, and I think it's going to be a challenge for them to differentiate which kind of companies can raise successfully on their different platforms. Obviously Crowdcube and Seedrs and Syndicate Room have led the way, but now they're being followed, close on their heels by venture founders and a new entrant I saw last week, Growth Deck, and there's increasing competition in that space, which makes me think that the fee structures will get compressed.
Yep.
But at the same time, you know, their numbers are growing in terms of the number of companies that they get funded. They're also themselves very particular about the companies that they list, so that, you know, you have to, you know, they have a rigorous process of how they list companies themselves, and I think that's to be admired.
Absolutely. Thank you, Peter. Fascinating. Peter Walsh, founder and CEO of Match Capital, a fascinating business, I think.